Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bhokre and now I am welcoming you on your own YouTube channel Ekeeda. Hope you are watching my videos regularly and getting benefit from it. Friends, today we are going to learn for CA Inter course Advanced Accountancy subject, topic name Internal Reconstruction, and we are doing question number 5 right now on your screen. It is there. Let's read the question, students. The draft balance sheet of Y Limited as on 31st March 2013 was as follows. So friends, they have given your draft balance sheet. Let's read the balance sheet. 5 lakh equity shares of 10 each, fully paid 50 lakhs. 9% 20,000 preference shares of 100 each, 20 lakhs. 10% first debenture 6 lakhs. 10% second debenture 10 lakhs. Debenture interest outstanding is 1,60,000. Trade payable is 5 lakhs, director's loan 1 lakh, bank overdraft 1 lakh, outstanding liabilities, that is other liabilities, 40,000, and tax provision is 1 lakh. Asset side, we have a goodwill, patent, land and building, plant and machinery, furniture and fixture, computers, trade investment, trade receivable, inventory, discount on issue of debenture, it is your fictitious asset. Profit and loss account debit balance is also your fictitious asset. And if funds are available, we'll take the opportunity to wipe off our goodwill also. Let us see the question and let us see what they are expecting from you. Let us see further. Note, preference dividend is in arrears for last 3 years. Friends, it is given outside the balance sheet. 3 years dividend is outstanding. It is not included in the balance sheet. So it is a contingent liability. If you pay that liability, it will be your loss. But if you cancel the liability, there will not be any gain too. So if that liability gets cancelled, we will not record. But if it is paid, we will record as our expense. A hold 10% first debentures for rupees 4 lakhs and 10% second debentures for rupees 6 lakhs. He is also trade payable. Repeat. He is also trade payable for rupees 1 lakh. So what is total due of Mr. A? It is rupees 11 lakhs. B hold 10% debenture of rupees 2 lakhs. 10% second debenture of rupees 4 lakhs and is also trade payable for rupees 50,000. So what is total amount due to B? 2 lakhs plus 4 lakhs, 6 lakhs plus 50,000. So 6 lakhs 50,000. So these are the major creditors of the company. First debenture are held by only these two people. 4 lakhs is held by A, 2 lakhs is held by B. Second debenture 6 lakhs is held by A and 4 lakhs is held by B. So it is debentures are held by only A and B. They are held only by A and B. There are no other parties in that. Besides that, they are trade payable. So in trade payable, 1 lakh rupees belongs to A out of these 5 lakhs and 50,000 belongs to B and rest of them will be called as a other trade payable. Let's see further information. The following scheme of reconstruction has been agreed upon and duly approved. All equity shares be converted into fully paid equity shares of rupees 5 each. All equity shares are made of rupees 5 each. In balance sheet, they gave you 10 rupees per share. Now it is converted into 5 rupees each. Preference shares are reduced to rupees 50 each. And the preference shareholders agree to forego the arrears of preference dividend in consideration of which 9% preference shares are to be converted into 10% preference shares. So arrears of dividend is cancelled, so will not pass any entry. They are saying their shares are reduced to rupees 50 each. Earlier they were 100 rupees each. And they are saying new preference shares will be of 10%. Now earlier 9% will get cancelled. Mr. A to cancel 6 lakhs of his total debt including the interest on debenture and to pay 1 lakh to the company and to receive 12% debenture for the balance amount. So whatever is A is due, that we will discuss when we solve the question again, right? Mr. B is to cancel 3 lakhs of his total debt including the interest on debenture and to accept a 12% debentures for the balance amount. Trade payable other than A and B agree to forego 50% of their claims, so it will be transferred to capital reduction account. Directors to accept settlement of their loan as a 60% by allotment of equity shares and balance is being waived, so remaining amount will transfer to capital reduction account. There were capital commitment totaling to 3 lakhs and these contracts to be cancelled on payment of 5% of the contract price as a penalty. So 5% comes to 15,000, which will be now debited to capital reduction account. Directors refund 1,10,000 of the fees previously received by them. For company, it is a gain. It will be credited to. For company, it will be a gain which will be credited to capital reduction account. Reconstruction expenses paid are 10,000. So it will be of course debited to capital reduction account. Taxation liability of company is settled at 80,000 and same is paid off also immediately. So we paid 80,000 of the tax liability. So what is the difference in that? We will transfer of course to capital reduction account. The assets are revalued as under. So they give you revaluation of assets. Land and building revalued at this figure, plant and machine revalued at this figure, inventory revalued at this figure, trade receivable revalued at this figure, computers are revalued at this figure, furniture and fixture revalued at this figure, trade investments again are revalued at this figure. So whatever figures are there, if there is a appreciation, there is a profit, capital reduction account credit. If there is a depreciation or reduction, it is a loss which will be debited to the capital reduction account. What they are asking you further, friends, they are asking you past journal entries for the all above mentioned transactions, including amounts written off goodwill, patent, loss in PL account and discount on issue of debenture. So they are saying they want to write off all those things. So when you write off those things, those will be credited and it will be of course debited to the capital reduction account. Prepare bank account and working of allocation of interest on debenture between A and B. So they also want working note. They have not asked you to prepare a balance sheet. That is the positive part of this particular question. The question is small, balance sheet is not asked, तो अपने लिए advantage है. Let's go ahead with the solution of this question. Friends, we are ready with the journal format. Let us go one by one with all informations. The following scheme of reconstruction has been agreed upon and duly approved. All equity shares to be converted into fully paid equity shares of rupees 5 each. Earlier they were 10 each, now it will be 5. That means same number of equity shares will be there in future, but face value and of course paid up value will be 5. So there is a benefit to the company and that benefit we will credit to the capital reduction account. That will be a balancing figure, or I can say it is 5 rupees per share. Let us note down the entries. Friends, you can notice your entry. Equity share capital old rupees 10 account debit to equity share capital new rupees 5 account credit, and the difference is transferred to capital reduction account. So 5 lakh into 10, 50 lakhs, 5 lakhs into 5, 25 lakhs, and the remaining 25 lakhs we have transferred to capital reduction account. It is what a simple entry for reduction of face value of equity shares. Let us see the second one. The preference shares be reduced to rupees 50 each and the preference shareholders agree to forego the arrears of dividend. They are saying that preference shares will be reduced to 50 each. They are also saying that they will forego the interest which was payable to them, and we know that it is outside the balance sheet, contain liability. When it is cancelled, will not pass any entry. And they are saying in consideration of which, that means they are foregoing the dividend, but in place of that they are asking you that 9% preference shares to be converted into 10% preference shares. So what you need to do, you need to debit old preference share capital account of rupees 100 each with 9% dividend. You will credit 9% preference share capital account 50 rupees each, and the difference you will transfer to capital reduction account. It is what the simple understanding of this entry. Let us pass the entry. Friends, you can notice the entry. 9% preference share capital rupees 100 account debit to 10% preference share capital rupees 50 account credit to capital reduction account, which is a balancing figure. You can notice earlier also there were 20,000 shares of 100 each. In future also there will be 20,000 preference shares of rupees 50 each. So the difference sacrifice, what they did the sacrifice, and that sacrifice we are transferring to which account, sir? Capital reduction account. Narration is being 8% preference shares of 100 each converted into 10% preference shares of 50 each, and arrears of dividend are cancelled. Of course, for that we have not passed any entry because it was a contingent liability. Let us see the next information. Mr. A to cancel 6 lakhs of his total debt including the interest on debenture. He is going to cancel how much amount? 6 lakhs. And to pay 1 lakh to the company and to receive 12% debentures for the balance amount. Let us go ahead with this information again. एक बार वापस read करते हैं. A is to cancel how much amount? 6 lakhs of his total debt. So firstly, I need to know what is the amount due to A. Whatever amount due to A, we will firstly shift to A's account, which is a personal account of A. Then we will cancel 6 lakhs of his dues. Then they are saying he will also pay you 1 lakh rupees, so that also we will add. And he will get 12% debenture for his balance amount that we will work out. So safely, slowly we will begin with our entry. Friends, you can notice the amount due to A we have transferred to his personal account. That is 10% first debenture 4 lakhs, 10% second debenture 6 lakhs. Trade payable account debit 1 lakh. Debenture interest outstanding is 1 lakh. Sir, how you got this? You can notice the balance sheet. They have not given the breakup. I will show you the balance sheet. Friends, you can notice your debentures are 6 lakhs and 10 lakhs. Rate of interest is same. So it comes to 1,60,000. If I say 10% interest, so it is 1,60,000. Can I say ये 1,60,000 जो है, the amount which is 1,60,000 here is exactly in proportion to the amount of debentures? So based on that, I have taken here a debenture interest outstanding 1 lakh for A because the debentures totally held by him is 10 lakhs, and on 10 lakhs 10% is 1 lakh. So I have taken that. So friends, here I have written that how I got the interest amount, and it is a total due to Mr. A 12 lakhs, that is 4 lakhs plus 6 lakhs 10 lakhs, 11 lakhs and 1 lakh more, that is 12 lakhs total amount due to A. Now let us see how he is settled. Friends, here they are saying A to cancel 6 lakhs of his total debit or total debt including the interest. So how much amount he is going to cancel? 6 lakhs. He will also pay you 1 lakh. So he will pass one single entry for all those transactions. Let us do that one by one. Next entry. Friends, so our first entry, because A has cancelled his sum of the dues amount rupees 6 lakhs, for which we will pass the entry A's account debit to capital reduction account credit. Friends, you can notice the entry A's account debit to capital reduction being amount waived or cancelled by Mr. A 6 lakhs. What they are saying further? Let's see. So they are saying Mr. A to cancel 6 lakhs of his total debt, for which we recorded the entry. Further they are saying and to pay 1 lakh rupees to the company. So we further received 1 lakh rupees from Mr. A. Entry will be bank account debit to A's account. You can also say cash or bank account debit to A's account. Friends, you can notice the entry bank account debit to A's account being additional cash received from Mr. A. What they are saying further? And to receive. So now A will receive new 12% debentures for the balance amount. So we need to find out how much amount is due to Mr. A. Let us firstly pass the entry and then we will decide about the amount. Friends, you can see the entry A's account debit to 12% debentures account being balance due to A settled by new debenture. Sir, how to get the amount? 12 lakhs was due. Earlier you have seen that entry number 3 where we have decided 12 lakhs is payable to A. 6 lakhs he has cancelled here in this fourth entry. Further he paid you 1 lakh rupees cash. So what is net amount payable to him? 12 minus 6 comes to 6 lakhs plus 1 lakh cash. So it comes to 7 lakhs. So we are giving him altogether new debentures of rupees 7 lakhs. So it is how I have passed the entry for the settlement of A. Here I can say A's account is fully settled. Let us see the next information. Mr. B to cancel rupees 3 lakhs of his total debt including the interest. So B will cancel how much amount? 3 lakhs. Same like A, we will pass first entry for the amount payable to B and then we will pass the entry for cancellation of 3 lakhs and accept new debentures, new 12% debentures for the balance amount. So whatever is the balance amount, for that he will get a new debentures. Exactly same entries will come. First entry will come for deciding amount due to Mr. B. Second entry will be for cancellation of the amount and third entry is to settle him. So there are altogether 3 entries we will record now. Friends, you can notice the entry. 10% first debenture 2 lakhs debit, 10% second debenture 4 lakhs rupees debit, trade payable debited 50,000, debenture interest outstanding 60,000 is debited to B's account. How I got this 60,000? 6 lakhs of the debenture multiplied by 10%, as we have already discussed in case of A also. It is total amount payable. Now you have to take the total. So total will be 7,10,000. So this is the total amount we need to pay to Mr. B. What they are saying, he has cancelled rupees 3 lakhs of his total dues including the interest. This is what your information number 4 is saying. Mr. B to cancel 3 lakhs of his total debt including the interest. So I will pass one more entry to cancel this 3 lakhs from B's account. So my entry will be B's account debit to capital reduction account 3 lakhs. Friends, you can notice the entry B's account debit to capital reduction 3 lakhs. The amount which he has cancelled is transferred to capital reduction. Now they are saying further he is settled. How it is settled? Let us see the question. And to accept, B is to accept new 12% debentures for the balance amount. So once again we will settle Mr. B. B's account debit to 12% new debentures account. Let us pass the entry. You can notice our entry. B's account debit to 12% debentures new account. Amount settled is 4,10,000. How I got 4,10,000? Total due of Mr. B was 7,10,000, of which 3 lakh is cancelled. So I need to pay 410. Being new 12% debenture issued to Mr. B in settlement of his account. So in this way we have completed settlement of B. Let us see all further transactions now. Trade payable other than A and B agreed to forego 50% of their claims. So I can say trade payable account debit to capital reduction, amount we will decide. Friends, you can notice our entry. Trade payable account debit to capital reduction account. Importantly, how I calculated, your total trade payable as per the balance sheet was 5 lakhs, of which 1 lakh was Mr. A, 5 lakhs was Mr. B. Of that 50% is cancelled. So 50% is 1,75,000, the amount which is cancelled. Being 50% of the claim of other trade payable is cancelled. So simple entry we have recorded. Let us see the next one. Sixth information. Directors to accept settlement of their loan as to 60% thereof by allotment of equity shares. Friends, our new equity shares will be of rupees 5 each, and balance being waived, which will be transferred to capital reduction. So our entry will be directors loan account debit to equity share capital account and to capital reduction account. Let us pass the entry. Our entry is directors loan account debit to capital reduction account and to equity share capital account. Importantly, they are given 60% of the amount by way of equity shares. So I can say remaining amount is cancelled. So my calculation is like that. Directors loan account debit 1 lakh, capital reduction account is a balancing figure in this entry. This 60,000 how I got? It is 60% of the due. So balance we have transferred to the capital reduction account. In this way we have settled director's loan. Let us see the next transaction. Next transaction is that there were capital commitment totaling to rupees 3 lakhs. These contracts are to be cancelled on payment of 5% of the contract price as a penalty. So there is a one contract which we need to cancel, and for that we need to pay a penalty of 5%, which comes to 15,000. So it is a loss to the company directly. So your entry will be capital reduction account debit to bank account 15,000. Let us pass the entry. Provision for tax is 1 lakh, so it is settled at rupees 80,000. So I will say tax provision or provision for tax account debit to bank account to the extent amount paid and to capital deduction account to the extent it is settled. So I can say my entry will be ready. Our entry is provision for tax account debit to bank account. The amount paid was 80,000. So capital deduction account is a balancing figure, being tax liability settled. Let us see the next transactions. Assets are revalued as under. Now I need to check balance sheet along with this information. So I am also going to put a balance sheet here. The revalued figure of land and building is 28 lakhs. In my balance sheet, land and building is 30 lakhs, but it is revalued at rupees 28 lakhs. So I can say there is a decline. So decline in land and building is your loss. So land and building, we will have a loss. Next asset, plant and machinery is revalued at 4 lakhs. Let us see what is the book value. Book value of plant and machinery is 10 lakhs, revalued at 4 lakhs. So there is again loss. What will be the amount of loss for plant and machinery? It will be 6 lakhs because book value was 10 lakhs, revalued at 4 lakhs. Next is inventory. It is revalued at 7 lakhs. Book value of inventory was 10 lakhs, revalued at 7 lakhs. So here also we are at a loss. Trade receivable revalued at 3 lakhs. Book value is 5 lakhs. So again there is a loss. Computer revalued at 1,80,000. The book value, we have to see the balance sheet. It is 3 lakhs. Again there is a loss. Furniture and fixture is revalued at rupees 1 lakh. Book value is 2 lakhs. Again there is a loss. Trade investment revalued at 4 lakhs. Let us see the book value. Book value is 5 lakhs. So here also we are at a loss. So friends, I can say in a nutshell, all these assets will be credited and capital deduction account will be debited, not with this amount but with the difference amount, that is the balance sheet value and revised value. So in this way we will get the amount of loss. So let us record the entry. Friends, you can notice the entry, capital deduction account debit to all these assets account. Here I have written book value minus revised value. It is the amount of write-off from those respective assets. Entire amount we will debit to which account? Capital deduction account, 16,20,000. Let us go ahead with the next information. Friends, what they are saying further, past journal entries for all above mentioned transaction including amount written off of goodwill, patent and loss in PL account and discount. So those also will be credited, and which account will be debited? Capital reduction. Let us pass that entry. Friends, our entry to write off goodwill, patent, discount and PL account is here. Capital deduction account debit to respective account. Those are written off, being intangible and fictitious asset, being intangible and fictitious assets written off, and this entry is your last entry to write off those accounts. What question is saying further? Let me see. Bank account and working for allocation of interest on debenture between A and B. Before that, firstly let me check what is the difference in my capital deduction account. If there is any difference, that will be transferred to capital reserve. So I am preparing small working note for your capital deduction account, and then I will go with this information. Friends, I have prepared capital deduction account format. It is just a rough working. It is a working note. It is not required by the question. So in this account, I will just post my amounts on debit and credit from all the entries, and then I will decide whether it is telling or it is showing some difference. So let us post all those amounts. Friends, our capital deduction account is telling at this amount. That means there is no further balance to be transferred to the capital deduction account. I have posted all entries relating to their number with their numbers either on debit or credit side of this account, and in this way account is getting tallied. Let us see. Their requirement is what? Prepare a bank account and also distribution of interest among A and B. So let us prepare a bank account, which is official requirement of this question. Let us prepare the bank account. Let us prepare the bank account. I am ready with my format of bank account. So I have to begin with firstly balance sheet, and then I will post all entries about a bank account from our journal entries. So let me write firstly the opening balance. Friends, if you look at the balance sheet, there is a bank overdraft. There is no bank balance. So overdraft is a credit balance in your bank account. So let us begin with that. Friends, here I am going to post all journal entries which affected my bank account one by one. So let us go with that. Friends, we will go entry by entry. Entry number 1, bank account is not there. Entry number 2, bank account is not there. Entry number 3, bank account is not there. Entry number 4, bank account is not there. Entry number 5, bank account is debited to A's account. So this I will post. Entry number 6, there is no bank account. Entry number 7, there is no bank account. Entry number 8, bank account is not there. Entry number 9, bank account is not there. Entry number 10, bank account is not there. Entry number 11, bank account is not there. Entry number 12. Entry number 12, bank account is credited with 15,000. So let us write down entry number 12, bank account is credited. Friends, entry number 12, we have credited bank account with 15,000. Entry number 13, bank account is debited with rupees 1,10,000 to capital reduction account, 1,10,000. Next is number 14, bank account is credited with rupees 10,000. Here I need to write by capital reduction account 10,000. Entry number 15, bank account is credited by provision for tax account 80,000. So friends, I have credited bank account with 80,000 here by provision for tax. Entry number 16 and 17 don't have anywhere bank account, so that will be ignored. So I need to close my bank account, friend. So closing bank balance is 5,000. It is normal bank balance. It is debit balance. This we have done because question asked you to prepare a bank account. One more thing question asked you. They asked you to distribute the interest on debenture between A and B. So whatever amount of debenture they are holding, according to that we will calculate the interest, and that calculation already we have shown in our journal entries, but now we will show as a working note. Let us see that. In order to decide how to allocate the interest, firstly we need to see the balance sheet and what is the rate of debenture interest which is there, and that we will see with the amount also. Let us go back to the balance sheet. Friends, you can notice 10% first debenture, 10% second debenture. Amount of debenture interest outstanding is 1,60,000. If you take a total of these two debentures, it is 16 lakhs and it is exactly 10% of that. So depending on the debentures held by them, multiply by 10% will be the interest for the debentures to be shared by both of them. So let us calculate that. A share in debenture interest. For that I need to know what is the amount of debentures A was holding. A hold 10% first debenture 4 lakhs and 10% second debenture 6 lakhs. So I will take a total of that. A hold all together debentures of rupees 10 lakhs. So interest on that at the rate of 10%. One lakh. In the same manner, I will work out for B. Friends, look at the question. B hold 10% first debenture 2 lakhs and 10% second debenture 4 lakhs. So based on that, we will work out the interest. Friends, you can notice B's share of the interest is 60,000 and 1 lakh plus 60,000 is your total interest of rupees 1,60,000. It is how your balance sheet interest is divided between A and B according to the debentures held by them. Friends, I have completed the question. Question was a little lengthy but very easy. Friends, if this kind of questions come in your exam, you should go for it. This question give you easy marks if you just read the question correctly. Friends, I hope you have understood everything whatever I have taught in today's session. But before I close the video, I request you to subscribe to our channel Ekeeda and also press bell icon. Also, please share this video with your friends so that they can also get the benefit from that. Thank you for watching the video, students. God bless you.